So how am I gonna reduce the buying power that this put option is taking from me? Roku here. Roku has dropped a lot. It was trading at almost 230 and now it's trading at, let's see what it closed at on Friday, January 7th. Closed at 180. So it's killing my buying power. If I look at my buying power, see this line here, it used to be 40,000. Now it's 30,000. I didn't really open any new trades that take a lot of buying power. It's mostly because of Roku that my buying power has decreased without even doing anything. So that's the risk with naked puts. And Roku is a 50% margin requirement stock with Questrade, so it's taking a lot of buying power out of me. So what can I do to reduce the buying power? I've got two puts here, 160 and 120 for January 2023. They were initially put spreads that I rolled into a naked put, thinking that the naked put strike was completely safe, that it was never going to get touched, so I didn't care about it. Even if it was a naked put, I was just trying to save a put spread instead of confirming a loss and picking a strike that's super far. But now it's only 20 points away, this 160, and this 120 is getting closer, and you see the unrealized loss on it is pretty big, and it's taking a lot of buying power. Now let's look at the amount of buying power it's taking from me. All right, so Roku is a 50% margin requirement stock. I've got one contract, market price is 180 and short strike is 160. So it's taking 7,000 US buying power out of me. So how much is that in Canadian? Almost 9,000. So it's taking 7,000 times 1.27. Yeah, so almost 9,000 Canadian buying power for one naked put. That's not, and how much credit did I collect on this? Not even worth it. Where's Roku, January 2023? Roku is here, 160. I collected total credit of 379. So definitely not worth the buying power that it's using. So when the stock was at 230, it wasn't so bad. It was taking, even 4,500, it was a lot. But when I did this trade, the stock was trading at around 300. So it was taking very little buying power, then about 2,400. So it didn't matter. But now that it's at 180, it's problematic now. And the other strike that I have, which is 120, is taking 3,000. So Roku alone is taking about $13,000 of buying power in Canadian for credits of total credits received of combined of $5.56. So what can I do to reduce it? The only thing I could do is send it to 2024 and try to bring the strike slower, or even turn it into one strike instead of two contracts, into one contract instead of two contracts. So here, let's see what I can do. I'm gonna go custom here. Now the market's close, so I'm not gonna have accurate numbers here, but this is what I would do. So January 2023, I've got the 160, and then I add another put for January 2023 as well, but I've got the 120, and then I'll add another put, but this time I'll go to January 2024, and I'm gonna sell, and I'm going to see if I turn it into one contract 180, so 31 plus 12 is about what, 43, and I can collect $55 from the 180 strike for January 2024 if I do one contract. Now let's see how that saves me in buying power. Remember, combined right now I've got 3,000 and 7,000. I've got 10,000 US buying power that's being used for both of my naked puts. But now what if I keep 180 only? I'll have a 9,000. What if I convert the two puts that I have into a 180? It'll be taking $9,000 of buying power. So it's going to be taking $1,000 less of buying power, but my short strike is already in the money or at the money. And I'll collect an extra credit, and that extra credit is going to help reduce the buying power as well. So that's one good way to roll it. What else can I do? I could keep it two contracts, but then I can lower it as much as possible. If I lower it to 115, so if we base on the last traded price, which is probably not accurate, see, I could sell the 115 for $21, so 21.33 times 2 minus my 31.43 minus my 12.22. So right now I could roll it for a small debit of $1 to 115 January 24 strikes. Now if I do that, what's the buying power? So two contracts with a strike of 115, it's going to take 5,000. So I can go from 10,000 buying power to 5,000 buying power if I roll it this way. So that's much better. Now, if the stock continues to drop, that's that's the other problem. What if it drops to 115? It's going to use 11,500. But I mean, if it drops to 115, I guess it's a good deal. I don't know. But yeah, so that's one way of rolling it so that I can reduce the buying power that it's taking. Because right now it's taking 10,000. Now, what else can I do? Now, let me just make sure that the prices are accurate. I'll just go to Yahoo Finance and look at the bid and ask, because it's on Yahoo, it still shows the bid and ask. So I'm going to look at the bid and ask on January 2024, 115 for Roku. So Roku, and then I'm going to go to options, and then I'm going to go to the expiry that I want. So January 2024. Let's click on straddle so I could see it easily. And I want the 115, right? So 115, where's the bid and ask? Okay, so forget the straddle, let's do list. All right, so put option 115. The bid is 20.25 and the ask is 27.5. So see, I could actually roll it for a credit because I was using 21.33, but it's actually a little bit more. So 20.25 plus 27.5 divided by 2, that gives me 23.8. So in my example here, this 21.33 is actually 23.5, let's say. So that means I could roll for a credit. So 23.5 times 2 minus 12.22 minus 31.33. So I could roll it for a net credit of $3. So that's $300 plus I'm reducing my buying power from 10,000 to 5,000. Now, what's annoying is that if I had done it while Roku was at 230, I would have gotten a much bigger credit. So it sucks to do it while you're in trouble because you're getting a smaller credit. But on the other hand, I kind of have to do it because it's taking too much buying power from me. I don't like having that little buying power because it stops me from confidently opening new trades. Is there anything else I could do? I like the idea of turning it into one contract, but what if I bring it to 140? See, $21 is not enough. Will not pay for the debit that I'm gonna have to pay for closing the initial trades. What about 160? So I need a put option that pays at least the debits of what I currently have. So 31.43 plus 12.22. So I need at least, there you go, what a perfect amount. So I can roll it to 160 to one contract. What is that going to do to my buying power? 160, but one contract. So so it's going to save me about 3,000 of buying power. So I can go from 10,000 to 7,000 instead of going from 10,000 to 5,000. But instead, in one scenario, I'm going to have only one contract of a 160 strike. And in another scenario, I'm going to have two contracts of 115. So what is safer? One contract at 160 or two contracts at 115? I think that's the ultimate question. What is safer? Having two contracts at a lower strike or having one contract at a fair strike? 160. And then what if it continues to drop? What if it drops to 160? I'm going to 8,000. What if it drops to 150? I'm going to 8,500. What if it drops to 115? I'm going to 10,000. But if I have two contracts at 115, I'll be going at 11,000. So it might be safer to just have one contract actually. It's not going to reduce my buying power by a lot, but at least it reduces the buying power a little bit, but it also reduces my risk in the trade. I don't think Roku is going to zero, so that's not the risk, but who knows where it goes, and at least I only have to deal with one contract. And yeah, so if it's at 180, it takes about 7, so I'm only reducing it by 30% currently. So these are my two options basically. It's either I roll it to 160, so I go from two contracts, 160 and 120, to one contract of 160 but January 2024 expiry, or I go from 160 120 January 2023 to two contracts of 115 January 2024. So I'd like to get your opinion. So please leave your comments below. What would you do? What do you think is safer? Keeping two contracts but having a much lower strike, or keeping one contract but having an average strike of 160 in this example? So if I go to Roku, let's look at the chart over here. Let's see if we can see what's a fair price for Roku. I mean, PE ratio, where's the PE ratio? It's 87. Actually, does Questrade show the same PE ratio? It's showing 92, okay. 87, all right. 1 year target estimate, so this is just based on analysts, 376, but it keeps getting reduced. I think it was downgraded recently. Let's look at financials. So total revenue, about 2 billion. It's increasing. I mean, look at 2018, 2019, 2020, last 12 months. So the revenue is increasing. Let's look at net income. It's finally profitable. 286 million last 12 months. Let's look at the earnings. Yeah, you can obviously see that the revenues are growing. It's always beating. So everything looks good. Why is it dropping this much? Let's look at the balance sheet. Assets total assets 2.27 billion. Total liabilities. Okay, so that's good. It's got more assets than liabilities by a decent amount as well. It's got a lot of cash, 1 billion in cash. Let's try to do some technical analysis here. 1 year, it's at a 52-week low. 5 year, is there any support, obvious support somewhere? I don't know, 116 maybe. So yeah, if anyone's good at technical analysis, please leave your comments below. What's a support? What's a decent support for Roku in the last 5 years? I don't know how low it can drop. I'd have to compare a similar company and see what the PE ratio of a similar company is trading at. But I don't know what a similar company is. Does it show here? Are these similar? People also watch Square, Zoom, Shop, Twilio, and Docu. I don't think these are similar. Alright, doesn't matter. Let's look at Questrade. Sometimes Questrade has like these reports here. Smart Score maybe? What does the Smart Score say? Yeah, so let's look at this. Alright. Smart Score says neutral. Okay, that helps a lot. Thanks. Analyst ratings moderate buy. Average price target 350. Okay, so why is it trading at 180? Blogger opinions bullish. Roku sentiment 90% sector. Average 73%. Hedge fund activity. Okay, so they are to blame. Insider activity. Yeah, that doesn't help, of course. Worth $1.78 million. Sold shares. Tip ranks investor sentiment very positive. News sentiment bullish. Technicals is negative. 20 days, 200 days, 12 months. Yeah, so that doesn't look good. And fundamentals, return on equity 85%. Asset growth, 85%. Return on equity 14%. Overall, I'd say it's fine. I would say it's safe. Maybe I shouldn't do anything. Maybe I should just add some capital so that I don't have to worry about it. Because what's my notional value? Like, how much is it really taking from me? If I had to cover it with cash, then I basically need to cover the strike. So I need 16,000 and 12,000. So I need to have at least 16,000 plus 12,000. I need to have at least $28,000 in my margin account. See, I only have in Canadian or in US, I've got 8,000. So I need 20, whatever amount I just said, 28,000 cash US to really not be bothered by the naked puts on Roku, so that I'm not trading on margin. But then my buying power is not going to come from that cash because Roku is holding it up, for example. My buying power will come from the leverage in my TFSA. Yeah. All right. So yeah, leave me your comments below. Let me know if I should roll into 2 contracts, 115 strike, or if I should roll 1 contract but a 160 strike, or I should do nothing and just try to add more capital. All right, thanks for watching.